In my latest video series 91, we have learned investment cycle. Today, while this video series 92, let us understand operating cycle of a manufacturing firm and computation of holding periods and credit periods. The operating cycle consists of a sequence of current assets conversions. The main two operating current assets for most of the business are inventory and trade receivable. Let us look at the operating cycle of a service provider, a trader, and a manufacturer. The operating cycle of a service provider is shown here with the help of a diagram. There are no inventory in case of a service provider. When I say inventory, the stock of goods. Upon completion of service, either the service provider receives cash or the amount to be received for the service provider becomes a trade receivable. When the receiver of the service makes payment, the account receivable becomes cash. However, the service provider incurs expenses while rendering service. That is, the cash becomes debtors. Debtors on payment becomes cash. This need not be the case always. Sometimes after providing service, the service provider gets the cash for the service provided. So the cash becomes cash. Wherever the entity has received the services may demand some credit period, in which case, after having provided the service, the fee payable to him or the charges payable to the service provider becomes a trade receivable. Then the person or the entity who received the service makes payment on the due date. Trade receivables becomes cash. This is the operating cycle of a service provider. Now let us move on to the operating cycle of a trader. When I say trader, the one who purchases the goods to be traded and sells the goods. He does not have the raw material and semi-finished goods. He purchases the finished goods, sells it. The operating cycle of a trading firm looks like this. The trader has cash. He purchases the finished goods. He sells it. When he sells it, if he receives cash, sales becomes cash directly. If the trader is selling the product on credit, that is allowing some time to the buyer to make payment, upon making the sales, it becomes accounts receivable or trade debtors. When the buyer makes payment on the due date, the accounts receivable becomes cash. The operating cycle of a trading firm starts with the purchase of finished goods. Cash or loans are used in the purchase transactions. When finished goods are sold, sales happen either on cash terms or on credit terms. If the finished goods are sold on cash terms, the cycle ends with the receipt of cash. If the finished goods are sold on credit terms, the sales becomes account receivable. When buyers settle the dues, the account receivable becomes cash and the cash cycle ends. Let us now move on to the operating cycle of a manufacturing firm. The operating cycle of a manufacturing firm starts with cash. Cash is used in the purchase of raw material and continues through the production, wherein raw materials get converted into semi-finished goods and finished goods, followed by sale of products. The cycle ends when sales are converted into cash. Sales becomes cash when the cash sales are made. If the sales are on credit terms, when sales are converted through collection of trade receivable, cash or credit is required to start the cycle, and cash is the ending point of the cycle. This is how the operating cycle of a manufacturing concern looks like. Here he has cash. He makes the cash payment to the supplier. Supplier provides the raw material. The raw material gets converted into semi-finished goods or work in progress. To get converted into work in progress, there are some expenses which are required, which are wages, power, and factory overheads. These power, factory expenses, and wages together with the raw material makes the raw material into work in progress. Again, the work in progress gets processed on the machinery together with the expenses such as wages, power, and factory overheads. So the work in progress becomes finished goods. If the sales are made on cash terms, these finished goods upon sale becomes cash. If the finished goods are sold on credit, the finished goods become, or the sale becomes, trade receivable. When the trade receivables are received on due date, it becomes cash. This is how the operating cycle of a manufacturing firm looks like. Here, for the conversion from raw material to work in progress and from work in progress to finished goods, the services of the laborer and the help of the power and other factory heads are required. Now, in the process of conversion from raw material to stock in process, the machinery assists the conversion. Machinery only helps in the conversion. Without the assistance of fixed assets, this conversion may not be possible. So there are two things which go into this. One, the supplements like the services of the labor, power, fuel, other manufacturing expenses, and the assistance of the machinery makes the raw material get converted into stock in process. Again, from stock in process to finished goods, the services of the labor and the assistance of the power, fuel, manufacturing expenses, together with the help of the machinery, are required for conversion of the stock in process to finished goods. The raw materials themselves shall not get converted into semi-finished goods or finished goods, but may do so in conjunction with other fixed assets. The conversion also needs the services of labor and also has to incur expenses like power, fuel, etc. The operating cycle is a short-term cycle which is associated with the day-to-day activities in a business. Each industry has a typical operating cycle which business aim to manage as efficiently as possible. The time the business requires to complete the operating cycle depends on various factors such as 1. The source of raw material, the distance of supplies from the location of the business, number of sources, bargaining powers of the suppliers. The purchase terms, credit period available on purchases, the processing time, time required to convert raw material into finished goods, number of products the business has, selling terms, credit period extended on sales, competition, bargaining powers of buyers, etc. Operating cycle of a trader is shorter than that of a manufacturing firm. The operating cycle varies depending upon the nature of industry. For example, the operating cycle of a ship breaking unit is longer than a PVC pipe manufacturing unit. Let us now learn how to calculate the operating cycle of a manufacturing firm. The components of operating cycles are holding period of raw material, holding period of semi-finished goods, holding period of finished goods, credit period extended on sales, credit period available on purchases. When I am telling about the holding period of raw material, what is the minimum quantity of raw material the business has to keep with them to ensure uninterrupted production? The holding period of semi-finished goods talks about the processing time, and the holding period of finished goods depends on what is the quantity of goods which are to be sold the business has to keep with them to ensure uninterrupted supplies. The credit period extended on sales depend on the market perception. If my competitor is giving 1 month's time to the buyers to make payment, I need to follow the same timeline, failing which my buyers may move to my competitors, thereby I lose the business. Similarly, credit period available on purchases is also dictated by the market practice. Now let us understand how do we calculate the holding period. The holding period of raw material is equal to closing stock of raw material into 12 divided by annual raw material consumption. Annual raw material consumption is equal to opening stock of raw material, that is the value of the raw material at the beginning of the financial year, say on 1st of April, plus purchases of raw material made during the period 1st of April to 31st of March of the financial year. Closing stock of raw material is the value of the raw material which were purchased but not consumed during the year. This figure will be as on 31st of March. Then the holding period of semi-finished goods is linked to the closing stock of semi-finished goods into 12 divided by cost of production. And the cost of production is equal to the variable cost of the manufacturing concern plus the depreciation plus opening stock of semi-finished goods minus closing stock of semi-finished goods. Variable cost means any cost which varies with respect to production. These expenses will increase when the production increases. These expenses will reduce when the production decreases. Examples are the raw material consumption, wages, power, fuel cost, other manufacturing expenses, etc. Now the holding period of finished goods is equal to closing stock of finished goods into 12 divided by cost of sales, and cost of sales is equal to cost of production plus opening stock of finished goods minus closing stock of finished goods. Now let us understand the credit period extended on sales. How do I know as a lender what is the average period of credit the business extends to its buyers to make payment? that is equal to trade receivable outstanding as on 31st of March into 12 divided by gross sales. When I say gross sales, the sales including all taxes. Now the credit period available on purchases. What is the average period of credit the business gets while purchasing the raw material? That is equal to trade payables outstanding as on 31st of March multiplied by 12 divided by the amount of purchases during the financial year. When I am multiplying it by 12, I get the period in months. If I multiply it by 365, I get the period in days. So the sum total of the holding period of raw material plus the holding period of semi-finished goods plus holding period of finished goods plus the credit period extended on sales is called the operating length or the operating cycle of the manufacturing firm. Now here is an example to understand how it is calculated. On the left hand side, the figures are given. Sales 800, closing stock of raw material is given, semi-finished goods is given, finished goods is given, trade debtors outstanding is given, trade creditors outstanding is given, raw material consumption is given, cost of production is given, cost of sales is given, and purchases are given. All these figures are available either in the profit and loss account statement of the business or in the balance sheet of the business. Now the holding period of raw material is equal to the closing stock of raw material into 12 divided by the annual raw material consumption, which is 2 months. Similarly, the holding period of semi-finished goods equal to closing stock of semi-finished goods into 12 divided by cost of production. And the holding period of finished goods is equal to closing stock of finished goods into 12 divided by cost of sales. And the credit period extended on sales is equal to trade debtors outstanding or trade receivables or accounts receivable into 12 divided by gross sales. Similarly, the average period of credit available on purchases is equal to the trade creditors outstanding or the trade payables outstanding or accounts payable outstanding into 12 divided by purchases. So these figures are available in months if they are multiplied by 12 in the numerator. If they are multiplied by 365 in the numerator, what do we get is the period in number of days. The sum total of holding period of all the three items plus the credit period extended on sales give you the operating cycle of a manufacturing firm. So in this video series 92, we have learned operating cycle of a manufacturing firm and how it differs from the operating cycles of a service provider and trader. We also understood computation of holding periods of raw material, semi-finished goods and finished goods, and credit period extended on sales and credit period available on purchases. While appraising a credit proposal, what we do is we collect 2 years financial statements of the business and compute these holding periods, credit periods, and compare each one of them. If they are found to be comparable, we accept what is given in their estimate or projection. Suppose they are not comparable, we have to seek the necessary clarification from the business and satisfy ourselves before incorporating the same in the credit proposal. Subscribe to this channel to receive intimation on my new videos. Please note that subscribing to this channel is free. Press the like button and share the information with your friends and colleagues. In my video series 93, we shall discuss the risks associated with an operating cycle of a manufacturing firm. Thank you very, very much.